Welcome back to CEO.CA, where we're at PDAC 2025, and I have the pleasure of speaking to Marc Bishop Lafleche, the CEO of Ecora Resources. Thank you so much for joining us today.
It's a pleasure. Thanks for having me.
So to start off, Ecora Resources is a royalty company with a proven business model. Can you talk a bit about what the business model is and how it's differentiated from other royalty mining companies?
Yeah, well, half of our business model is pretty much exactly the same as any royalty company. And that involves making upfront payments for the right to receive a percentage of income or production once operations are in production. What's different about Ecora to many of the royalty companies that most are familiar with is that we have really focused our strategy and our royalty portfolio into critical minerals. So as of today, approximately 80% of our net asset value relates to base metals. Just under 50% of that is copper. But also in our portfolio, we have uranium exposure, vanadium exposure. So our commodity basket is tied to some big mega trends, whether it be electrification of energy consumption, digital infrastructure, just population growth and urbanization. So really broad sector trends. And there aren't that many royalty companies that offer this commodity exposure.
Can you talk a little bit about the production growth and what you see happening in 2025 and what investors should be watching?
Yeah, so from our producing portfolio, I think the largest source of growth we'll probably have this year is in copper. So that's a function of organic growth. We have a royalty over Capstone's Manto Blanco's mine in Chile. And year on year, volume growth is expected there. But last week, we announced the acquisition of a $50 million copper stream over a producing copper mine called Mimbula. So year on year, we should see a good amount of copper growth. And Mimbula will keep growing in the next couple of years on top of that as well. Elsewhere in our portfolio, Voisey's Bay, we have a cobalt stream over the Voisey's Bay mine. And last year, Vale announced the completion of the underground expansion. So year on year, we saw in 2024 a big sizable volume growth from the underground mining operations, and that's expected to continue this year. Something like 60 to 90% volume growth in cobalt deliveries on that stream. And that's all in the background of some pretty weak cobalt pricing. As of today, we're in a probably 50-year low in real terms on cobalt prices. So there's real torque in our portfolio on cobalt prices recovering, maybe not this year, but mean reverting. And if it is this year, you have some pretty helpful dynamics in that the world's largest producer of cobalt, 80% of that coming from the DRC, has recently announced a total export ban in the context of these real weak prices. So certainly something to watch. And then last but not least, the third one to flag relates to our Kestrel royalty. Kestrel is a royalty over a steel-making coal mine in Australia. Production at that asset is moving out of our royalty area in the next few years. But anyways, in the short term this year, we anticipate at least equal to or more on the volume side from what we saw in 24.
So talking a little bit longer term now about, say, this year to the year 2030, part of the growth plan is increasing copper exposure. Why should investors be excited specifically about that metal?
Yeah, I mean, Ecora has sort of two things going on. If you're new to the story, the first thing to understand is that historically, Ecora was really concentrated in one royalty, and that was the Kestrel royalty I just mentioned. If you go back even 10 years from now, almost all of the asset value and all the revenue was from Kestrel. That royalty, as I mentioned, will be running its course. So that royalty is a revenue profile that's decreasing. On the flip side, we have this portfolio that we think is absolutely wonderful, as I mentioned, in copper, nickel, uranium, amongst other commodities that are sort of growing in an X shape, where the coal is coming down and the rest is coming up. And that's really the other side of the coin. In the next 5 years, I think we have today this wonderful organic growth pipeline that takes us to, from today anyways, potentially $100 million of income in our royalty portfolio and assets that are very advanced. And then beyond that, we have a number of earlier stage assets that offer wonderful longer term growth exposure. I think that's the key thing about Ecora is that today, steel making coal is a little bit out of fashion. But the other side of that coin is the ramp up of everything else, and that's getting increasingly a lot more attention. And really, I would encourage your investors and the audience watchers to take a look at what comes after the met coal, because that's also the opportunity, I think, for an investor today as we shift the key source of a revenue from sort of an old 20th century type of commodity to a future-facing mineral basket for the future.
So that leads me into my last question and sort of a follow-up on that. Can you talk a little bit about Ecora's valuation and what you see happening in the short term and into the long term as well?
Yeah, I think today Ecora trades like a business that derives the majority of its revenue from steelmaking coal. If you look at our trading multiples, we trade at a fairly substantial discount to other royalty companies, but we trade at an absolute premium to steelmaking coal mining businesses. And I think in the next year, 2, 3, 4, we're going to see a very rapid deceleration of the met coal contributions of our income profile, and substantial growth is expected primarily from copper, but other base metals amongst other commodities. I think just based on where businesses trade with those types of cash flows, most people would anticipate that the valuation would lift on the back of higher trading multiples. If you look at where copper equities trade versus a coal mining company, you see a very large disparity in trading multiples. And the other thing I think that Ecora offers is just sizable absolute growth. We have a portfolio of royalties over some really household names. I mean, Ecora itself is a small cap company, but the folks operating these mines are mega cap, including BHP, Vale, Rio, Capstone. We have a royalty earlier stage, but over arguably amongst the highest prospective uranium deposits anywhere in the world, and that's NextGen's Patterson Quarter East discovery. So there's a lot to love in this portfolio, and I think the market has been very focused on the runoff of the steel making coal royalty. But as we enter 25 and we enter this 5-year and beyond growth phase of everything else, I think that's just very exciting.
Well, it sounds very exciting to me, and I'm sure to all the investors who are watching. I just want to thank you so much for joining me.
Yeah, it was a pleasure. Thanks for having me here.